Good afternoon, ladies and gentlemen, and thank you for joining us today in our webinar where we will talk about tackling climate change through sustainable finance. As some of you are aware, we have launched the Sustainable Development Academy at the BIBF last year, and we have collaborated with the London Institute of Banking and Finance as well as Fitch Learning, and we offer a series of programs. The upcoming ones, we have the Technological Changes and Sustainability, which will be offered on 23rd of March. And then we have a series of climate risk related programs, which will start in March, we have in May and in July. So climate risk has been growing in importance on a global level because of its severe impact on human lives as well as financial impact. And according to Munich Re, in 2021, overall losses as a result of natural disasters amounted to around 280 billion, of which roughly 120 billion were insured. And these losses were actually 33% higher than the 2020 level of 210 billions. In terms of human lives, we lost approximately 9,200 lives as a result of natural disasters. And because of the financial impact and the importance and how it affects actually the financial stability, it's crucial for the financial sector to really consider climate risk into their business. So I'm pleased that I'm joined today by experts in the field, I will be joined by Marie-Laure Aka, the head of Risk ESG and member of the executive board of the risk function at BNP Paribas. I'm also joined by Emmanuel Rondeau, a visiting professor at LIBF and a non-executive director and chair of the board risk committee at Banque Postale, and Vera Koubek, who is a sustainability consultant and a visiting professor at LIBF. So Vera will start by sharing a short presentation about climate risk, and then we will be having a discussion with the panel. Vera, it's all yours.
Thank you, Zeeba, and welcome everybody. Good afternoon. It's my great pleasure to be here and great honor to be here. So let me start with a short introductory presentation. Can you all see my slides?
Yes.
Yes, okay, excellent. Okay, so yeah, my name is Vera Koubek. As Zeeba kindly said, I'm a sustainability consultant and I'm also a visiting professor at LIBF, which is the London Institute of Banking and Finance. And what we do at LIBF is we provide financial education, obviously focused on sustainable finance these days as well. So what is the deal? First thing I want to kind of have a look at is why is it that climate change seems to be on everybody's agenda at the moment, and how did it happen? Right, when I started being interested, I mean, I used to work in financial services for about 15 years before I moved on and I started kind of running my own company. And when I came to financial organizations some 10 years ago and say, I want to help you with sustainability, they looked at me and they said, well, who are you? You know, go and work for an NGO. So why is it that suddenly sustainability and climate finance is so prominent? So the first slide here is just to show you the context. So through our industrial processes, we trap about 400 times the energy of the Hiroshima nuclear bomb every single day, which is bad news as well as good news. Bad news, obviously, because we cause climate change. Good news because we can do something about it. It is something that we are causing, and it's therefore something that we can change and we can do something about it. So what is the impact of climate change? It's the stuff that we all see all around us each year. We see more droughts, more heat waves. On the other side, we see more hurricanes, more floods. And then there are the secondary impacts. So things like redistribution of marine species, for example, are leading to a loss of biodiversity because, for example, the birds that would normally feed on these fish have nothing to eat. But it also has an impact on the societies, on the people who live, who would normally have these particular species as a part of their diet. So what we are also seeing is what we call involuntary migration, so climate migration. People are leaving their homes and trying to live in places where they can live better. We also see diseases moving from warmer areas or traditionally warmer areas to the areas that are currently warming up, which means there's an increased cost of healthcare, and we have great risks of pandemics, either global pandemics or local pandemics, etc. So there's an impact, well, wherever you look, right? Environmental impact as well as social impact. And what we saw quite clearly through the COVID crisis is that if the nature doesn't work and if the society doesn't work, the economy doesn't work either. So the economic impact as a secondary impact is quite significant. Zeeba shared some of the numbers. They are quite striking numbers. It was actually a couple of years ago where Swiss Re, I think, was the first insurance company. They published an article and they say if we keep going with climate change, we will not be able to insure certain activities and certain businesses because obviously the loss is just too huge. Okay. So where does it all come from? You may be seeing pictures like this. This is a projection made by IPCC, the Intergovernmental Panel for Climate Change. And what it shows is these are our historical emissions. And if we don't change the way we run businesses and the way we live, we are kind of currently on a pathway for about 3.5 degrees of warming before the end of the century. Now, 3.5 degrees of warming will most likely mean a completely different planetary system. So we will be moving from what we refer to as Holocene to Anthropocene. And Holocene is basically the time of stable climate that allowed us as human beings to develop. So what we would like to reach is some of these are alternative pathways. This is the good news in the bad news. So we can change the way we run our businesses. We can change the way we live, and we can aim for we refer to this as a low carbon economy or generally low emission economy. So these are some of the projection pathways. Depending how much we change our behavior, we will either reach the below 2 degrees. We still believe it is possible to reach below 2 degrees Celsius warming, or slightly different outcomes potentially. Now, this is a survey done by the World Economic Forum. Every single year, they go out, reach out to the major players in the economy, and they ask the organizations what they perceive as the main risks facing us in the next kind of decade. And the reason why I'm showing it here is they call it the risks. So the blue one are economic risks, green one are environmental risk, geopolitical, societal, and technological. And you can see that at the beginning of the decade, 2010 roughly, most of the perceived risks were of economic nature. And through the decade, we have slowly shifted to most of the risks these days being perceived environmental risks and geopolitical risks, which generally goes hand in hand. So we will see that the landscape of the risk is actually being, it's not just an academic debate, it is perceived by the players in the market. Now, how do we go about it? What do we do about it? You might have heard about the Paris Agreement, which was agreed in 2015. It was a major diplomatic success. It was probably the first time in history where practically all nations in the world agreed on something. And the agreement in Paris in 2015 was made where we said all countries will aim to limit global warming to 1.5 degrees Celsius or well below 2 degrees Celsius. Why? Because we believe the 2 degrees are safe, so we can adapt to the climate change, but the climate will essentially stay, the stable state of the climate will essentially stay the same. Now we started talking about something that we refer to as stranded assets. And stranded assets are basically assets that we invested in, but we will not be able to capitalize on fully. So stranded asset may be infrastructure that we will not be able to use, or it may also be, for example, oil reserves that we will not be able to use if we want to cap global warming at the well below 2 degrees Celsius. And in 2015, there was an agreement that all nations that signed the agreement, which was all nations in the world except for 2, they will determine so-called nationally determined contributions, or NDCs, which basically says these were the pledges by the individual countries, what they will do in order to cap the global warming. And now last year at COP26, the nations met in Glasgow and they did kind of a check, and they added up all the nationally determined contributions, and they worked out that the NDCs altogether are unfortunately not sufficient. So we don't talk about NDCs anymore. Now we started talking about net zero. So rather than say do whatever you can, we say we do whatever it takes. And we have seen, what is interesting for us as financial professionals is we have seen a new organization. There's lots of different alliances that are aiming to either provide guidance or provide the momentum. And we have seen a new one, which we refer to as GFANZ, which is the Glasgow Financial Alliance for Net Zero. And GFANZ is currently headed by Mark Carney and Michael Bloomberg. And the goal of GFANZ is to mobilize private capital to tackle climate change, where we said, you know what, the public capital, the capital that governmental or the governments can pledge is not sufficient. We do have to mobilize private capital, and the private capital will be used for both mitigation as well as adaptation. Adaptation finance has been, I would say, slightly forgotten for some time, but it is a substantial part of our efforts to mitigate climate change.
Just like I explained before, we have these 3 categories. We have transactional apps, we have analytical apps, and we have inspections. So we will now see transactional apps. So you can use the apps to perform transactional tasks such as creating, leaving,
I think
somebody's got their microphone on.
Yes.
By mistake.
Transactional app. And we do this by just using the My Purchasing Document item app.
Okay, thank you. Right, so we were talking about GFANZ. We said the goal of GFANZ is to mobilize.
Search for anything, and we now see a list of all the purchasing documents. And they are all listed in the table. We can see that there are 12 elements shown. This is an
Thank you. So we were talking about GFANZ. We said this is interesting for us as financial professionals because GFANZ is very much specifically focused on mobilization of finance, of uniting financial institutions. All members of the GFANZ have to establish so-called science-based targets. So we are not asking the institutions to come up with their own ideas and say, let me show you what I can do. But the targets are following the science, so that at the end, when we add all the targets together, we are actually achieving the cap on the global warming. Now, I'm just posting this this kind of analytical framework here, because this is the way how one of the most prominent regulation, or it's not regulation so at the moment, but one of the most prominent frameworks that we are using to assess climate related risk is called TCFD. And TCFD recognizes 2 different types of risks. So the first one is the physical risk related to climate change. So we say, yeah, of course, if climate change progresses, whether it will be capped at the 2 degrees or whether it will not be capped at 2 degrees, there will be some physical impact. So we see the extreme weather events, we see the rise of sea levels, for example, loss of biodiversity, etc. but also because we as people want to do something with it, there will be risks that are related to transition. So we must not forget about these. And transition, we mean things like new policies, new regulation. We are likely to see different change of demand. So as consumers and customers are getting more and more knowledgeable of what climate change actually means, they are changing their consumption patterns. There will be change in demand. And then we are likely to also see changes in the supply, which is typically related to technology, but potentially other different patterns in supply. And that's also a source of, risk or need for adaptation, need for a change. And then as a subset of this transition risks, we see legal risks. So things like corporate responsibility for certain climate-related risk, for example, fiduciary duty, how we manage financial risks on behalf of beneficiaries, etc. So I'm just showing you this framework here because if you are interested in climate finance, you are very likely to come across this type of risks. Now, what happened during COVID? Some people say, yes, did COVID help? As you can see in here, COVID did help. We are actually seeing the kind of level of CO2 emissions in the atmosphere drop, but they always drop only when we drop our industrial production. So we saw this here in COVID. This drop was caused by lockdowns and by essentially stopping our economies for a certain number of months during the year. There is a kind of worry that just like in 2008 when we encountered a major financial crisis, it's almost like we didn't make most out of the crisis. So eventually the economic growth and economic progress returned to where it was before. And we are now slightly concerned that the same thing will happen with COVID, that once we reopen the economies again and reopen the industrial production, we will get back on the same pathway. So some countries, we see this, I would say EU is very, very strongly focused on what we call green recovery. So they say, don't let the good or don't let the crisis go to waste. Make most out of the crisis. So when we build back from COVID, we build back better. So we are focusing on green recovery. We are focusing on low carbon recovery, and all the investments and all the kind of recovery funds will also have another goal, and that is decarbonization and mitigation and adaptation to climate change. Now you may think about what happened with SDGs. If you have been in the sustainable finance space for a while, you probably picked up or noticed that 5-6 years ago, when you talk to financial institutions about sustainable finance, they were typically talking around SDGs. SDGs are Sustainable Development Goals. These are goals that were put together by the United Nations in 2015, and United Nations FI, Financial Institutes, or UNEP FI, which is a kind of unit within the United Nations, they realized that if we want to achieve these goals, there are 17 interconnected goals, we will need to finance it somehow. So they mobilized financial institutions. They managed to put over 240 banks together. This number of banks is growing over time. So over 240 financial institutions, altogether over 60 trillion of US dollars in assets under management. And they gained a commitment from these institutions to integrate sustainability into their operations, for example. And many of these financial institutions then define their own sustainability around SDGs. We are now seeing a movement away. SDGs are still relevant. It's still a very useful framework for activities. But we are seeing organizations moving from SDGs towards net zero. So net zero is the more prominent kind of piece of terminology or piece of jargon.
Vera, just for the sake of time, I think if we can just wrap it up maybe in
absolutely.
2 minutes.
I've got 2 last slides. I'm just saying, what does it mean for banks? So if you look at the commercial banks, there's a list of challenges. the first one here is challenges related to stranded assets. So, for example, if you hold a collateral and the collateral becomes a stranded asset, that means you don't have a collateral. There are also challenges related to bank capital and also challenges related to liquidity. I believe some of my colleagues may talk about these during the panel discussion. And then there is a discussion around changing client behavior by structuring the products, right? So can we make our clients behave more sustainably because we structure the product that would incentivize them to do so? And the discussion is here about, is this really a role of the bank or is this a role of the regulator? And the other question would be, can we really afford to keep offering unsustainable products, or is this the only option that we have? So this is probably the commercial bank perspective. And then if we take the central bank perspective, the regulators and the central banks obviously face their own challenges. So in January 2020, Bank for International Settlement called climate change, they call it a green swan, which basically means where the impact will be felt most are the tail risks, right? We're assuming that the tail risks will actually be much more likely than what they are at the moment. So what we're seeing is kind of twofold trends in regulation. The first one is around transparency. So we are seeing taxonomies. The EU launched their sustainable taxonomy last year, but we are seeing taxonomies being developed in other regions as well. We're seeing efforts around mandatory disclosure and fiduciary duty. And then in terms of prudential requirements, we see supervision of governance, stress testing is a big topic here. And there's also a discussion around capital requirements if we need to change this in relation to climate change. And as I said, I believe some of these themes will be then discussed with my colleagues during the panel discussion. So thank you very much. I hope I wasn't much over time.
No, that's fine. Thank you so much, Vera. Very, very informative presentation. And actually, the point you mentioned about insurance, I was a while back, I was speaking to someone in the insurance, and he mentioned that, you know, if you don't have insurance supporting you, you basically don't have business, which is, if you think about it in terms of the insurance losses that are being encountered as a result of climate risk. So thank you again for the presentation. And I think I will start by addressing a question to Emmanuel. So we will first look at it from a board perspective. And given your experience as a board member yourself and as well as an executive trainer, so what are the conversations that are taking place on a board level in relation to climate risk? And I just want to get a feel about how the boards are really addressing climate risk related issues.
Thank you, Zeeba, and good afternoon to all. And thank you, Vera, for the presentation. I think your question is very valid, because it's true that climate risk is not new. And Vera reminded us of many steps in developing the awareness around climate risk. But the truth is that it has been considered as sort of a side issue at board level for a long time. And the reality that now it's really becoming central, I think. There is an element of push and pull, maybe, and in what's going on today. Maybe I could mention three key drivers for the interest of the board on the topic, apart, of course, from the general interest. But the first one is obviously the pressure from the regulators. Regulators are now pressing ahead with real developments around guidance, and especially in Europe, in the UK, with the European Central Bank. It's becoming more and more detailed. They are disclosing their expectations in terms of climate risk management. And as most of you might have heard, there are now dedicated climate risk stress testing exercises being rolled out. So the first element is clearly the pressure from the regulators. we should also mention the fact that there is a strong demand, and bankers are interested by the market they are in. So when you have a market like green finance, which is growing by 20, 30, 40% a year, of course, it raises interest from the boardroom as a significant market trend. It's quite rare to find activities where you have this kind of double-digit growth rates. So that's, I would say, that's why I was mentioning a push and pull thing. And also a third driver, which is growing in importance, is the impact of NGOs and shareholder activism. There is a live example with Credit Suisse these days, where just now investors in Credit Suisse are basically saying the disclosure about climate risk is not enough, and they put pressure on the AGM, the coming AGM in April, to get more information and more detailed presentations about the strategy around climate risk. So I think definitely today climate risk is a top priority for board, and has definitely reached the boardroom.
Yes, exactly, because on one side, I think there is the potential loss as a result of inaction, and on the other side is looking at what possible growth opportunities are there that you can capitalize on, which I think we'll be addressing in a bit. So Marie-Laure, I'll come to you, and given your position as the head of ESG risk, what are the different emerging risks that are coming up, and how do you really prioritize what you are considering, and how are you tackling climate risk, if I'm being more specific?
Yeah, thank you very much, Zeeba, and good afternoon, everyone. First of all, I would like to really thank you for this invite and for giving me the opportunity to share on these important matters. To the question on priorities, in fact, what I must say that for BNP Paribas, these are not new topics, because the bank has a long-standing engagement in these climate and environmental related topics. And this is really at our core, at the core of our strategy. And this has been, again, once again evidenced in our recent disclosure on the 22-25 strategic plan, which we call the GTS, the Growth, Technology and Sustainability. So you see that there is really a dedicated part of the group's strategy, which is about sustainability. And Vera mentioned also the G-Funds, which is the key alliance from the private sector, and BNP Paribas is also a founding member of the Net Zero Banking Alliance, and which is a UNEP-FI initiative under the UNEP-FI umbrella, let's say. And we are really striving to finance a net zero economy by 2050. So I'm mentioning all this really to say that to some extent, these priorities are natively embedded in what we are doing, because ultimately what we are saying is that we are committing to being a long-term partner for our clients, and to supporting really the transforming shift of our clients towards a more sustainable business models, because basically that's what we are also talking about here. And Emmanuel mentioned the growing, let's say, scrutiny from stakeholders, including civil society and the NGOs and so on, but also regulators. So these are now being seen as emerging risks. So, which means that for us as a bank, we are continuously really reinforcing our framework in order to support our ambitions, as I just mentioned. And I will touch upon some of the key ongoing initiatives in that respect in the coming points we'll be discussing.
Thanks. You highlighted a couple of important points, which is being there for the long run when it comes to your shareholders, and Also considering, again, just as Emmanuel has mentioned, the growing demand from the investors who are questioning what are the ESG practices. So Vera, in your presentation, you presented the World Economic Forum and the changing risk. So I will ask you perhaps the same question from maybe a different angle about how do you see risk being prioritized when it comes to companies, when it comes to investors? What are your views on that?
Yeah, very, very interesting question. Thank you. I would probably second, or I would start with what you were saying. You know, we are in it for the long run, and we are looking at stakeholders, not just the kind of narrow view of shareholders, traditionally narrow view. So what companies typically do, or what we are seeing around us, is companies typically perform what we call materiality assessment. Because if you put together all the risks, I mean, you can start with the World Economic Forum, for example. If you put together all the risks, you will find that there's lots of areas where companies can focus. And obviously, you don't want to focus on all of them at the same time, simply because the change cannot be happening that fast for, you know, just for the stability and integrity of the organizations. So they perform materiality assessment. And now there are two different views how we understand materiality. For people who work in financial services, or for the accountants across the space, materiality is normally seen from the perspective of financial materiality. If something is financially material, that's important. But there is a broader view of materiality in sustainability, which was introduced by GRI, the Global Reporting Initiative, and that basically looks at two dimensions. So one of the dimensions is the organizational one. So we say which of these risks are important for us as an organization, for us as a business strategically. And then the second dimension is which of these risks are important for our stakeholders. And stakeholders meaning both internal stakeholders as well as external stakeholders. So by kind of prioritizing both of these, normally you would see it as a form of a matrix. So you would have a subset of these risks important to both to the company as well as to the stakeholders. And again, that kind of feeds into the perspective that we want to be there for the stakeholders, because it is ultimately the stakeholders that will make our business successful. And we are there for the long run. So materiality assessment, I would say.
Yeah, materiality assessment, of course, because different business models will be affected, I would say, in a different way. So which takes me now to Emmanuel. So Emmanuel, since we are still in Q1 of 2022, time is flying very fast. But what kind of, or what do you think we should expect to see this year in 2022 when it comes to climate risk priorities again?
Well, it's a very important question, because indeed as you say, the agenda is moving quite quickly for all parties involved. And that's very interesting because after the pandemic, there was this really refocus on climate risk, which is a little bit shadowed as we speak because of the conflict in Europe, but which was clearly before this recent development, a top priority on the agenda of especially of regulators. It has been penciled as such by the ECB, for instance, the European Central Bank, as a 2022 priority, climate risk management. So I think also we have to make clear that it's not new, and it's now developing with more and more experts and expertise around the table, but it's still very complex to deal with, and very complex to embed actual climate risk management within banks and financial institutions. So it's still early days in a sense. There is growing expertise around the topic, but we can't say that we are just in a mature situation where it's a question of implementing. There are many technical topics which are still being debated, standards are not stabilized yet. So I think the priority for 2022 is, at least from, I would say, a board perspective, is to try to, on two sides. One is to try and understand what is the direction that is taken by the standardization approach. What are sort of the key elements which are starting to be stabilized? For instance, in Europe, we have the development of a taxonomy. For the first time, there will be a request to work around an official taxonomy as disclosed by the European Union. So it's an important step, of course, in this context of moving standards and techniques. The second aspect is really, as mentioned by Marie-Laure, the need to embed climate risk management into the organization, making sure that it becomes one of the pillars of risk management. Again, it's not new, but from maybe a control perspective, an internal control perspective, we are reaching a level where it is taking more importance, and in terms of reporting, and certainly boards are willing to get here a more granularity in terms of what are the key indicators they will be willing to follow, to track, to align the risk management performance with the sustainable strategy that has been defined at the board level. So I would say these are the sort of two priorities I see on the map today.
Thank you, Emmanuel. And this leads me to the next question to Marie-Laure, which is, now we spoke about the framework, we spoke about the materiality assessment. So from your perspective, how are you integrating the climate-related factors into your risk management framework?
Thank you, Zeeba. Good questions. And this is the roadmap for some years, I guess. In fact, maybe what is key to say here is that from a risk management perspective, at least the way we handle this at BNP Paribas is that it is not, climate is not, let's say, a risk per se on its own, but it's a potential driver of what we call the classical risks, meaning credit risk, market risk, operational risk, etc. And we now have, from a risk standpoint, to understand what we call the transmission channels through which the climate change may impact these traditional risks. So having this in mind, and Vera mentioned about the typologies of risk drivers, which are, when it comes to climate, which are basically physical risks and transition risks, we are now trying to put in place methodologies, having the data and so on to understand these transmission channels. With the potential financial impacts on credit risk, market risk, operational risk, etc. So taking the physical risk part, which is somehow the direct impact of climate change on people or goods due to extreme weather events, be they acute or long-term climate change, which we call chronic. Here, the idea is really to see how these could impact ultimately lower profitability, may lead to lower profitability or have impact on the real estate values and so on, and the way this is mapped with our own exposures and the potential risks on our exposures. Vera mentioned also the stranded assets, typically. So these are criteria that will be defined, that will need to be further defined in order to assess where we stand, where our portfolio stand in terms of these physical risk. The same for transition risk being the driver resulting from, let's say, the process of adjustment towards a lower carbon and more circular economy driven by policies, behaviors, or technological shifts, and so on. Again, here, what we are doing from a risk standpoint is to further assess really the way this will be transmitting to credit risk on the potentially on the creditworthiness of our counterparties with lower, let's say, performance, including asset performance, as I said earlier, etc. We may also have increased cost of compliance or legal cost, because this is also about reputational risk and so on. And the difficulties beyond the methodologies and data I've just mentioned, but I may come back to this also, is about the interconnection of many dimensions, because we may have sources of variability depending on the geographic location, on the maturity of some capital markets. We may have amplifiers, because many different policies may be combining and having an amplification of these either physical or transition risk and so on. But we may have mitigants also. How can we hedge in front of these type of risks? How can we diversify our businesses to mitigate also? All this is what we are trying to put in place to understand, and we need to have methodologies, and Emmanuel was completely right by saying that we still have to mature in terms of methodologies in that respect.
Yeah, I mean, risk by itself is complicated, and then having the environmental risk and the climate risk
exactly
on top of it.
Exactly.
And from what you've been saying right now, it looks like a lot of thought, a lot of planning, and considering what could be ripple affecting on what are important elements to consider. But you also mentioned areas that there could be opportunities from these risks. For example, when you mentioned about the hedging, about the potential diversification. So maybe I'll go back to Vera and ask you about, when we talk about climate, and the webinar is climate risk, but then I'm wondering about what opportunities could be there, or like the point that was mentioned earlier by Emmanuel, of course, when the board will be looking at something, either there is a cost for it, or it could be actually both. So there is a cost, but there is also an upside to it. So what are your thoughts about this?
Yes, thank you. Thank you. Well, I would say the kind of main opportunity is the same opportunities that we have always considered to be opportunities for bankers. So, we have to remember that the banking sector is supporting the real economy. So we finance new development, we finance trade, we help companies manage their working capital, their supply chain. And we are doing exactly the same. It's just that we focus on sustainable activities rather than facilitate economy that would produce pollution or waste or stranded assets. So this is the kind of level of normal standard opportunities where climate risk, some people would say climate risk is just like any other risk, right? It's just yet another category of risks. But I would say for example, from investment perspective, what we see is we normally see kind of 3 different specific pathways or benefits. One of them is portfolio diversification, because the sustainable products have a slightly different risk profile and different features, and hence some investors would use it to diversify the current portfolio. The other one is, we still have relative flexibility. We have seen taxonomy being developed, but to my knowledge, only the EU has got actual taxonomy that is currently mandatory. So there is still relative flexibility in the product design, and some investors are taking benefit in that. Of course, we have to be careful not to greenwash. We have recognized greenwash as a risk in its own right. So obviously, that's something that really is not desirable. And the third opportunity here is broadening the kind of investment base or the investor base. So if you broaden the investment offering, you attract different types of investors that you traditionally would. And I would say, I would almost go back to the question that I already posed during the presentation. We can't really afford to finance unsustainable activities. So the main opportunity here for us is to facilitate development that will deliver a better world, better business, and better environment, better social system or economic system as well for all of us.
Exactly. Thank you, Vera. So, Emmanuel, I'll come to you. I'll ask you this question, and it's picking up from what Vera said and what Marie-Laure also said. So, Marie mentioned about some of the costs which they are incurring, which is, for example, the cost of compliance and then the cost of legal. And Vera also brought up the greenwashing. So my question is like twofold for you. Basically, what are the costs associated with climate risk and with sustainability as a whole when they are implementing it? And the second question is, what are your views about greenwashing and what are companies doing about this?
Well, thank you, Zeeba. Very important questions for bankers today, of course. And as mentioned by both Marie-Laure and Vera, things are developing on the product front too, on the risk front on one end and on the product front too. So there are the costs associated with risk. Whatever, I mean, any risk goes with a cost, and the difficulty here is clearly to measure the transmission, as mentioned by Marie-Laure, and all the more we're entering new territories. Let's not forget that if we look quickly to the two fundamental risks, physical risk is mostly a long-term risk, and as we all know from our using financial instruments, I mean, the net present value of long-term events is minimal. So it's quite difficult to introduce the value of physical risk into the current pricing of assets and strategies. And as far as transition is concerned, it's a huge cost. It's a huge upfront cost. It depends on how the transition is organized, if it's accelerated or not. And there is a political pressure to accelerate transition, but we need to finance this transition. And the return on transition might not be financial. So it raises a lot of concerns for bankers and investors who are used to just a sort of financial analysis of investment and the cost and a risk reward traditional view of investments. So there is this difficulty of measuring the cost of climate risk. At the same time, it's true, as mentioned by Vera, that it's a massive opportunity just because we need to finance the transition, and the potential is massive, as most numbers which have been articulated are absolutely huge in terms of billions, tens of billions every year, and it means that there is a lot of a big market for investors and bankers. So that's the sort of balancing the cost of risk and the reward from developing new businesses and contributing to a greener planet. Then your question was about greenwashing. I think there is a lot of pressure against greenwashing. I think that's good because up to now, it's true that part of the green business has been about greenwashing. Maybe not necessarily voluntarily, but just because it was nice to put a green sticker on products and financial products. Clearly, from what we see from recent developments, it will be blocked. It will be blocked by NGOs, by third parties. It will be blocked by regulators, and it will put a lot of pressure on the financial industry to make sure that when they say that a product is green, it is actually green, and it's documented, and it can be evidenced. And in that respect, it means that it's a positive trend, but it will make it even more complex for the financial industry to make sure that they produce actually green products. And it goes into what Marie-Laure described as of course, the legal risk associated with compliance risk and legal risk associated with the whole sustainable finance developments.
Exactly. I mean, having the kind of specifically addressing the green washing element is crucial, because with all these products coming up and these risk factors coming up, and with their complexity, it's easy for them not to be reflecting what they truly are, and which will shake the credibility and the investors' trust in the whole system. And that's why it's very important that these issues are taken very seriously. So I'll come back to you, Marie, and my question is, what are the main challenges that you are facing when you're embedding climate-related factors into risk management processes?
Thank you, Zeeba. We've mentioned some of those challenges, but maybe for the sake of time, I was just summarize the key challenges we are facing. But I think it would be fair to say that this is faced also by the industry in general, and even by regulators and supervisors. We are in a kind of joint learning curve when it comes to methodologies and understanding, as I said earlier, the transmissions channel of all this into the traditional risk. So basically, what kind of challenges I can summarize as first, maybe having common definitions and standards on what we are talking about in order to have across the industry really the same understanding, the same meaning of all this. We have the EU taxonomy, which is coming in, and we, as BNP Paribas, internally, we are developing also internal classification principles, obviously factoring in this EU taxonomy, but at least across the bank itself to have same meaning, standards, definition, and so on. Another challenge I mentioned earlier, data and IT infrastructure to gather the data needed in order to develop this understanding of impacts of climate and environmental topics on the traditional risks. And for that, we are entering with within the bank with an ESG data platform, which is a common tool shared across the group to gather internal but also external data from data providers. So these are challenges. Other challenges, development of robust methodologies, as I said also earlier. And for this one, we are developing an approach at individual client level in order to really understand and assess the ESG profile of our clients and the corporate ones in particular. We are having climate scenario analysis and stress testing, also leveraging of the supervisory, the ECB supervisory exercise ongoing on stress testing, because in this area, it is really key to have forward-looking methodologies, because we do not have historical meaningful series. We cannot rely on traditional way of modeling this type of risks. So we really need to have climate scenario analysis, the capabilities of projecting depending on different scenarios and so on. So we are also developing this internally. And last but not least, the regulatory and supervisory pressure, which is another challenge, and but still we are taking it as an accelerator that could be beneficial. But at the same time, the key point here is to say that regulators should not prevent the development of these opportunities. We barely have opportunities without risks, and we are handling the risks. But at the same time, it might be too premature to impose some types of capital and so on. And there was an interesting paper from the Banque of International Settlement in that respect some weeks ago around the challenges of regulators in this area, saying we should not impose at least to begin with, regulatory capital. It's far too premature, but maybe this could be handled through the ICAP and the Pillar 2 kind of assessments. That's what I can share. So.
Thank you. Very informative, Marie. And Vera, I want to pick your brain maybe quickly about where do you see the key obstacles are in tackling climate change, and why do we not see more progress?
Yes, thank you. I will probably just briefly develop what Marie mentioned. You know, very similarly. The kind of reporting and regulatory space is one of them. We have countless number of initiatives how we can disclose information, how we can report on our sustainability progress. We do see these standards converge together, which in my view is fantastic. So we will never have just one, but we may end up with a couple that will become a kind of common standard. So that's probably one. Then the other one is short-termism, very much short-term mindset, particularly in financial, in capital markets, in the financial industry as a whole. This is a challenge not only from a perspective of sustainability. This is generally a challenge from, if you take the perspective of stability of the financial system, no matter where the risks are coming from, the short-term mindset is not really serving us very well. And the third one, we already mentioned greenwash. So there's lots of information out there that we are finding it hard to assess because the knowledge is not there. Lots of people still in the sector. And I mean, it's very understandable that, the people are trained in a kind of very different economic environment. Many of them went to business schools years ago and never heard of sustainability up to relatively recently. So there definitely is a space for education or for professional training. And maybe the third one, we also need to remind ourselves that one of the key roles of the financial services industry is to support the real economy. So we do have to find the level of cooperating with the real economy rather than, kind of work in isolation. So the collaboration between what is happening in the real economy and what is happening in financial sector should be aligned. And I would probably come back to, I don't know who mentioned it, whether Emmanuel mentioned it or Marie mentioned it. We need to be able to finance the emerging business models. For example, circular economy is one, but there will also be others. And that is somehow lagging in the financial industry. So this would be my main ones.
So we have just 5 more minutes, and I will ask 2 questions. So number one is about net zero. So you've briefly mentioned this, Vera, and maybe if you can share with us a bit about how do we achieve net zero, any thoughts there? And the second question is about developing the human capital capacity in the field of sustainability, because of course, for us to achieve these objectives, you need the enabling environment, which human capital is one of them. So your thoughts on this, and then I think we will wrap it up.
Okay. Yeah, no, thank you very much. I would say both of them go hand in hand, right? How do we achieve net zero? That's the $1 million question. We are seeing new technologies being developed. The first ones are low carbon technologies coming to the forefront of my mind. So you would think renewable energy, hydrogen energy, for example. The progress is very, very fast. We're also seeing development or progress in technologies such as carbon capture and storage, which will not deliver net zero on its own, but it may buy us a little bit more time. We also recognize that it will be hard to achieve net zero without nature. So there's quite a lot of investments going into biodiversity development. So things like, for example, rewilding of areas or reforestation of particular areas. There is, just like we had a COP21 or COP26 in Glasgow, we're going to have another COP. This is another UN conference, but it's also obviously a COP conference of the parties focus on biodiversity next year, and it's going to happen in China of all places, which is really interesting place to hold it. And for any organization to achieve net zero, we have to remember that it's a journey. It's not a transformation that will happen overnight. And I would almost link it back to the materiality assessment. We shouldn't really aim to be net zero tomorrow, because that may destabilize the nature, the kind of integrity of the organization. So it's always a journey, and the transformation has to happen, or it will not happen on its own. So it kind of has to be driven from the top and from the bottom as a focused activity. And for any company, if you would like to know where to start, I would suggest you visit, it's called the Science Based Target Initiative, SBTI, which is basically an initiative. It's multiple different institutes got together and created this particular platform where they are helping different industry sectors to achieve net zeros. And they are publishing guidelines. The guidelines for financial services has been completed, just like guidelines for many other industries. Some of the guidelines are still in development, but it is interesting for investors or even for commercial banks potentially to look at the guidelines of the targeted industry that they would like to support financially, as well as the guidelines for financial services itself. So that would probably be my immediate thought on net zero.
Thank you so much, Vera. And I think for the sake of time, maybe just 1 minute for Marie and 1 minute for Emmanuel, just your final thoughts, anything you want to share with the audience.
Thank you, Zeeba. Maybe a key point, which is about training, because you talked about resources. Upskilling people is really key in this area. And internally, we have, this is on its own a dedicated thematic we are following at group level. And this is handled by group HR and company engagement at group level. And on the risk side, we are part of this global initiative, and we are really putting in place both awareness, but also more specific training paths in order to really upskill our risk population on these matters. So maybe this is another area which is really key to highlight.
Thank you. Emmanuel, maybe your final thoughts?
Well, thank you, Zeeba, and thank you again for the invitation. I think this kind of conversation is extremely useful. I would just elaborate on what Vera and Marie-Laure just said. I mean, I think training, learning, progressing all together is critical, as we have tried to illustrate through this conversation. It's a new topic. We are all progressing together. I mean, even the regulators and supervision are working with us, and we are all on the same boat. And I think the expertise is lacking still. So we need experts to share their views and to train our teams and to make sure that we all understand better progressively. We reach consensus through the main tools. So I think, again, this kind of conversation is extremely useful, but it has to go with more developed training sessions, and we need to collaborate all together on this very critical and complex topic.
Thank you so much. And I think we are just done with today's webinar. I really appreciate joining us today, and I hope that we meet up in some future webinars as well.
Thank you very much.
Thank you.
Thank you.
Have a nice day.
Okay.
Bye.
Bye.
Great afternoon to everybody. Thank you.